Welcome to the Modern CPA Success Show, the podcast dedicated to helping accounting firms stay ahead of the curve. Our mission is to provide you with the latest and greatest insights on cutting-edge tools, innovative marketing strategies, virtual CFO services, and alternative billing methods. Join us as we change the way people think about accounting.
In this episode of the Modern CPA Success Show, Adam Hale and I are going to do just the two of us talking, but it's going to be something that we talk an awful lot with other firms as we talk about CAS practices, advisory services. So Adam, I would love to hear more your thoughts. So at maturity, what does CAS practice look like, and how might that be different than what people would think more traditional accounting firm structure?
Yeah, and real quick, let's define CAS, right? So
Excellent. Yeah.
CAS, it used to stand for Client Accounting Services. And I think there's been a shift. They always called that like 1.0, and now they call it Client Accounting and Advisory, or Client Advisory Services. Sorry. So they swapped out accounting for advisory. I personally still think it's CAAS, Client Accounting and Advisory Services. And the reason being is because I think that at scale, depending upon what kind of client you're serving, Tom, you and I have both kind of felt this. It's really hard to decouple accounting from working with small businesses. You just can't. You know, if it's $100 million organization, they have an FP&A team, they have all this stuff. You can come in and just be the advisor. But I think that you need to have a baseline understanding of what their accounting model looks like, help them architect it in a way that tells a story.
I agree. And as you know, most of our clients, they need some accounting help up front to get things cleaned up. And if you don't have that, you don't have that foundation to be able to do much advising on top of.
Yeah, and how it looks different from like the traditional firm, because I think, you know, if you're operating within a department of a larger CPA firm, I'm sure there's a lot of tension there just because it does operate so differently. And I would say at maturity, it's built more like a corporate structure, you know, because it's all about leverage. Not to say that CPA firms don't have leverage, but it's less about like the partners driving revenue, and it should be more of like pushing everything to the lowest level. And, you know, of course, in the ideal state, again, that's the way it's going to be. But instead of having the BD team, you want to like create a system so that they're coming for the brand. So you're really selling, you know, what your company is doing rather than the individual. But in their infancy stages, they can operate a little bit like that, because typically if you're the owner and it's just you know, you're the BD person, you're the person that can handle big work, you know, in terms of the more complex work and stuff of that nature. So as you start to build out your CAS practice, you know, you have to be really intentional with separating yourself from the day-to-day work. And try to, you know, make that bold move, bring somebody in, offshore help. Maybe you outsource the resource to a firm or something and partner up, but you want to push all that other work down to the farthest level that you can so that you can focus more on the heavy duty work. And eventually, if you want to scale and be more than just you as an advisor, then you have to put yourself into a position where you know, you can kind of slide more out of that day to day and really upskill people.
Yeah. Yeah. And as you know, most of the accounting firms that we coach, when they get started, they're in that very traditional model. And the really common complaint that we have is it's the owner saying, but I'm doing everything, including even reconciliations and the cash flow meeting and the forecast. I want to get out of that. And so we do start talking to them about a little bit better structure. We're like, you need to start pushing those things down or you'll never be able to grow. You're limited by your own capacity. And one example of that is, you know, the clients I have in the cash flow meeting, I never go to the cash flow meetings. I've got a senior accountant who is really good at doing that. And they also know that they delegate to the offshore team most of the prep work. And that's part of that decentralized model that, you know, if everything goes sideways, then I might have to get in and get involved to do that. But that's rare. And the clients get to learn that. They don't expect me to come to their meeting and know everything that happened that day. That's getting to some of that corporate structure I think you talked about.
Yeah. And I mean, financially, don't get me wrong, for people listening to this that say, hey, I just want to be a solopreneur, you know, I want to be basically just self-employed and do this work. That's fine. The financials and the system are going to be pretty easy for you. Money in, it's all yours, call it a day. Sure. But if you want to grow a practice and you want to scale, or you already have a practice and you're trying to figure out, you know, the shift in profitability, how it works, because this is really the rub. If you've been a traditional firm, if you're a traditional tax shop, those kind of things, I think in most instances, financially, a firm has always, the terms that I always heard was a third, a third, a third, right? That
Mm-hmm.
means you spend a third of your money on production, you spend a third of your money on like overhead and sales and all that kind of stuff, and then a third goes to the owner. And then,
Yep.
depending upon the size of the company, 40% could go to owners. But whenever I used to go looking around trying to buy tax shops, my challenge is I would see 30 or 40% at the bottom line. And then I'd see a lot of partners just working a ton of hours to get to that
Mm,
40%. They'd be
yeah.
working like 3,000 hours. And I'm thinking to myself, wait a minute, I'm not going to do that 3,000 hours. So if I even just look at it at a regular rate and I have to hire two people to accomplish that work, we're not
Yeah,
really making 40%. So whenever you hear
exactly.
CPA firms go, oh, I want a 40% or a 50% bottom line, are the owners working for that 40 or 50%? Like, you got to bring that down to a normal level. And I would say, in contrast, like a CAS model, if we're thinking about it from a corporate structure kind of a standpoint, we still want to achieve like a minimum of like a 20% bottom line. Ideally,
Hmm.
we're at about a 25 to a 30% bottom line. And so, but we're doing it completely leveraged. Like the owner necessarily is already included in that as kind of like an admin wage, if you go
Yep.
into that 20 to 25%.
Yeah. And if you think of it similar to a corporate structure, and we talk internally about you've got your gross margin that you're trying to hit, just like normal company. What are those production costs that you have in managing to that? And we know internally, what do I need to make on each individual client? We're around 70 to 75% is our target for that. And if we realize that, then we can hit about a 50% gross margin. And then you start taking away what's the overhead, including owner payments, sales and marketing, everything to get down to what looks very much like a corporate kind of income statement to do that. And I think that's a really important way to look. It also for the CFOs, as you know, it's the way we tell our clients to look at their business. So we're kind of doing our own kind of analysis, but as we work with them, it's the same thing. I just got off the call with a client where I was saying, let's reorganize your income statement so that we actually understand the gross margin and we can benchmark. This is a brand new onboarding client and they love it. But I said, here's all these things. The only benchmark it can tell you is how you're doing net profit wise and you're below. So let's organize it in a way that I can understand kind of where the problem is that we're trying to improve.
Yeah, I would say that one of the biggest challenges, obviously, because if I'm working with a client on a really fractional basis, I can charge them five, six
Hmm.
hundred bucks an hour, and they don't, they might not like it, but they have to get this one thing done. It's like a car repair, right? You got to do your
Yep.
tax return, and so if
Yep.
that tax return costs $5,000 and I can charge 500 bucks an hour, great. But if you're working with them on a more regular basis, a weekly basis, a monthly basis, and you're doing things like bill pay and
Hmm.
payroll and stuff like that, you can't charge those hourly rates. You can still get
Yeah.
better than those hourly rates, obviously, whenever you're just doing the advisory side of the house. But
Hmm.
most CAS practices kind of mix blend the back office, the accounting, because they have to in with the
Yep.
advisory. And whenever you do that, like you mentioned, Tom, our target's 50%. That's what we
Hmm.
want after all team cost. That's payroll taxes, that's benefits, that's everything all in. We even put our technology in there, which runs about 3%.
Hmm.
Um, However, in some of the reports that I see in the industry, most CAS practices run about 35% margin. And so their gross profits right around 35%. The high performers are doing right around 43, 44%. And right now that's really where we are. Now we target for 50%, but we're closer to that 43 to 45% right now,
Hmm.
with aspirations of continuing to be able to leverage and get to that point. But um, that's a different business model than that third, a third, a third that people are kind of
Yeah.
used to, and being able to the trade off, though, I think one of the biggest things is that you have this annuitized service, which is going to make the business worth more. It's going to make the business more
Hmm.
stable, and you're not always just like hunting for new clients. You can actually stack clients more on top of each other easily.
Yeah. Yeah. And that longevity as you look at your team of people, right? When I first came in, you had me start working with one client that I still have, multiple clients, but one that I think of. So much easier to work with them 5 years later. And they know me, they know what things we have. I know what's important to them to do that. And so some things become a lot easier. And that's sort of that long term piece that you have versus everything just kind of being a one off and being difficult. But the point you made, I think, around the margin is really good, especially if it is the, hey, I really want to be a one person shop. If I'm going to do everything, I'm really expensive to be coding in bills coming in and things like that. That just, if you want to stay at that size, maybe that works, but you just can't grow. So a big part of what we've talked about is how do you get other people like offshore, like seniors. And as you know, a couple of years ago, the huge push we had was how do you delegate work? Because people were too expensive the time that they're spending doing certain things.
Yeah. So, I mean, since the business model is a little bit different, so are the metrics that we really look at.
Hmm.
So, traditional firm, obviously, you're talking utilization, hourly bill rates, and of course, realization. How much of that bill rate are you actually getting for somebody whenever they're
Hmm.
doing it? And, I think most firms shoot for 85, 90%. Some are better, some are worse, that kind of a thing. And there's no disputing that the traditional model works. I mean, it's profitable. CPA
Right.
firms aren't going broke. I'm
Hmm.
not advocating against that model at all. I'm just saying, in general, the CAS is going to work different, and it has to
Yeah.
work different because we're more utilized, which means our average bill rate is probably going to be less. But whenever you multiply those two things out, and of course you got to take into account realization, hopefully we're realizing all of our money. Those things should kind of work themselves out to a very similar model. It shouldn't be different. um, but I think that rather than measuring that, I think because you're selling this mix of services and access, and hopefully
Hmm.
again more access than service, but you kind of have to do some of those accounting things. I think that what we're talking about is, rather than again charging that compliance type work, we're talking more about book of business whenever we do things.
Yep.
So I know if I have Tom, for instance, if a team member costs $100,000 and another teammate costs $100,000, there's two of them. You take
Yep.
them together, they're a team. They're $200,000. Well, if I want to hit 50% all in, then I know they've got to work a $400,000 book of business. Because remember, they're
Hmm.
sharing that book of business. So each
Right.
one of them has to work a $400,000 book of business, not
Hmm.
independent of one another. They're a team, so it's
Yep.
$400,000 total. And of course, you got to add in ancillary direct support. For us, we have other
Yep.
pieces of that pie that kind of work into there. But what we really do is rather than managing how many hours people are working, it's more responsibility based. So we're not really looking at, we can utilization, bill rates, and all that kind of stuff. But I know that if I have a target for a senior accountant to be able to do a $900,000 book of business, I know I'm going to be profitable. I'm going to be making my 50% target with no problem if they're going to be able to hit that 900,000, and that's the bogey that I go at.
Yeah. So just to be clear, in your organization, do you have an hourly target for team members? Are you telling us that, hey, I'm expecting you to be right at 1,800 hours a year or something like that?
What's your target, Tom?
I don't have one. That
You
was the
don't have
reason I asked the question. Yeah.
one. So yeah, no,
Yeah.
I understand. I was
Yeah.
just teasing you, but yeah, no, we don't, right?
Just to emphasize that we don't do that. Yeah,
But you have a book of business target. You know what
I
your
do.
book of business target is. And the cool thing is, don't get me wrong, like it also goes into the compensation structure and how you can kind of play those things out as well. Because, in a traditional firm, it's like, hey, I'm going to work all these hours and then I'm going to get a bonus at the end of the year. Bonus is kind of black boxed. Some people are trying to put frameworks around it, but they don't really know what it is. And whenever I hear some of the bonuses at the end of the year, and I'm thinking to myself, but you worked 2,300 hours. So you worked,
Mm,
an extra couple hundred hours
yeah.
over a 20, 80 hour year. And then you got what kind of bonus? And then whenever I run the math, it like doesn't even work out to time and a half. You know what I mean? It's
Yep.
like straight
Yep.
pay, if that.
Yeah.
And um, so yeah, you're not asking people to work necessarily more and then bonusing them for working more in that
Hmm.
instance. But what we can do is we can say each role should cost us as a percentage. We call it the penny game, but
Hmm.
as a role, I know that CFOs are going to cost me 15 cents on the dollar, right? So
Yep.
if a CFO says, I want to make $200,000 a year, no problem. Oh, you want to make $300,000 a year? No problem. 300,000 divided by 15 cents, that's your book of business target, right? And I can
Hmm.
do that for
Yep.
every role, and kind of walk through what those percentages look like. And if I build my team model up, then I know that if everybody's hitting their salary expectation or goal, then they can do that. Now, of course, you still get paid your base pay. And all I'm saying is we have seniors, for instance, where maybe their base pay is $65,000, but they're on track to make $100,000 this year because they're running a book of business, and their number's a little bit different than this. But say it's 10%, and they want to make $100,000, then they've got to run $1 million book, right?
Yeah. Right.
And so they have a very clear understanding of what their bonus is going to be, how to get to their bonus, and it's not a production game either. So a lot of times, people are like, well, the only challenge with that is what you're telling me is the more I work, the more money I can make. Well, kind of, because that's what the other model was. The traditional model was that, right? I just told you work 2,300 hours and hopefully 1,800 of them are billable, and then you get a bigger bonus. That's not how this game works. This game is built off of leverage. So every role pushes down to a different role. Now, at some point, it's technology or it's offshore team or things of that nature. But if you really want to win the game, you can't do all the work. A senior can't do $1 million book with a senior, with a CFO above them and an accountant below them if they're doing the lion's share of the work. They've got to make sure that they're pushing as much work below them. They're automating processes. They're being efficient with their clients. And so you're forcing them to just kind of understand how to, really kind of manage their book instead of just being a super producer.
I agree. And we could probably do a whole podcast on why we think the book of business is a really good measure. Because I've said jokingly, but I think it would be true around sort of not caring about hours, that if you and Jody found out that I was working 25 to 30 hours a week, but had this book of business and my clients were happy, you probably wouldn't be mad. You'd probably be saying, hey, teach other people how to do that, which is much better than often the traditional firm, which is, wow, he's great because he's averaging, 60 hours a week is what we hold up to the measure. And we're incented to say, how do I get more efficient to take on more work and not have to work as many hours?
I'd high five you and say, let's go play some golf. Yeah, no,
exactly.
If you can get it done in 30 hours, then get it done in 30 hours. I mean, it's about, again, it's about oversight. It's about responsibility. It's not necessarily about if you're chained to your desk cranking out. Nobody's winning an award here for, telling me that you worked 75 hours last week. I would be like, oh, wow, what can we do to get rid of that? So
yes.
Elevate your firm with a virtual CFO playbook, how to land $60,000 per year clients and provide a killer client experience. This comprehensive online series of modules provides you with the essential tools to create and deliver scalable VCFO services. Developed from Summit's successful approach, which propelled them from $500,000 to over $10 million in revenue in 10 years. This playbook will equip you with the skills to take your firm to the next level. Additionally, upon completion, you can receive 24 hours of CPE credit for the course. Ready to grow your firm? Enroll now at vcfoplaybook.summitcpa.net.
So what about this idea that we talk about that we're actually selling access? When we talk about high advising kind of services, what's your thought around that you're selling access? Because that is a little bit different mindset than some firms.
Yeah, it kind of goes back to the value bill proposition, right?
It does.
A lot of times whenever you're trying to scope a project, and you're always kind of coming back to, even if you do fixed fee and stuff like that, it always comes back to how much time am I going to spend in this job, right? Mm-hmm. And then you try to justify how much you're going to charge the client and make sure the math works out. That's pretty easy to do with services. Whenever I have to do payroll, I have to do bill pay, like there's a certain volume and a certain effort that's going to go into that work. Whenever it comes to advisory, I don't know if it's going to take me 30 minutes this month, or you're going to need 4 hours from me this month. Like, I have no idea. What I'm selling you is, we'll have a dedicated meeting or meeting cadence, and that might affect the cost. Sure. But what I'm giving you is access to me throughout the entire month. So the months where you only need me a little, fine. You're still going to pay me the same thing. In the months where you need me a little more, I'm here for you too. I want to be your first call. So again, instead of selling a thing that I'm going to do on your behalf, like pay your bills, now I'm just saying a true subscription, you have access to me. Use me as you need me, those kind of things. And if you're worried about scope creep and that kind of freaks you out, like that's where the meetings come in. That's where you can kind of flip things around and go, okay, but Tom, we're going to meet once a month and we're going to go over this, this, and this. Or I sold you on a bigger package. So I'm going to say, again, access. I sold you on a bigger access package. I'm going to say, we're going to have these 2 dedicated meetings a month, or these 4 dedicated monthly meetings. And then people know, okay, I have access to them if I need them. Feels good. I don't have to worry about getting charged hourly if I have a thought and I need to meet with them on something important.
Yeah.
But at the same time, you've controlled the narrative a little bit by creating these meetings.
Yeah. So as we like people to think differently, I think this is a really good framing around if you're in this kind of practice and thinking of growing it. Our strong suggestion is don't just think of your traditional model. That might be, I've got a partner who has 2 people who will only work for them, and this is how the work is done. There's different ways of doing it. And that by our pod structure and other things, we share resources. And that's how it works well, that we get a really good group of seniors and a good group of accountants that support them. And so you got this different, as you described, kind of that corporate structure of thinking about that it is a different kind of practice that you're running.
Absolutely.
Good. Thanks, Adam. This was really valuable.
Yeah, thanks.
Enjoy this podcast? Visit our website, summitcpa.net, to get more tips and strategy for achieving modern CPA firm success. We're here to be a resource in this ever-changing industry.